Hey everyone! In this video, we will be looking at a systematic trading strategy designed specifically for the SPY, the Spider S&P 500 ETF. It's called the SPY Calm Breakout Strategy, and we're going to break it down step by step, covering entry and exit rules, backtest results, and even some insights on forward testing. If you're looking for a solid, rules-based approach to trading, this video is for you. Let's dive in. All right, let's start with the basics. This strategy is systematic, meaning it follows strict rules with no guesswork. It trades on a daily time frame and only takes long positions. The idea is to capture breakouts when the market is in a calm phase, increasing the probability of a successful trade. Before we get started, first we have the disclaimer. This content is for educational and entertainment purposes only and should not be considered financial, legal, or investment advice. We do not offer recommendations, solicit actions, or account for individual financial situations. Now, before we look at the rules, let's check out the backtest results. We tested this strategy from January 2004 to January 2025. Over 20 years of data. Here are the key stats. In terms of overall performance metrics, we have a 2.9x total return over about 21 years. This equates to an annual rate of return or compound annual growth rate of 6.7%. The recent performance has improved over the last 5 years with an ROR of 10.8% per year. The Sharpe ratio of 0.73 indicates decent risk-adjusted returns. In terms of risk management, we have a maximum drawdown of minus 17.1%, a MAR ratio, which is the ROR divided by the maximum drawdown, 0.39, an average exposure of 58.6%, which means that this strategy is not always fully invested in the market, and an exposure-adjusted return of 11.5%. In terms of trade statistics, this strategy has 100 trades over this entire time period, which is approximately 5 trades per year, with an expectancy or an average trade return of 1.43%, which is very healthy, a profit factor of 2.81, a win rate of 85%, which is a very high win rate, an average win of 2.8% versus an average loss of 6.5%, and an average win length of 28 days versus an average loss length of 47 days. This is the equity curve of the strategy. You'll notice that there are significant periods, such as during the Great Financial Crisis, when it's completely out of the market. This table presents yearly and monthly percentage returns, along with total annual returns and maximum drawdowns. Here are the key takeaways. In terms of the highest annual return, we had a 26.7% return in 2013, which is the best yearly performance. In terms of the worst annual returns, 2022 saw the steepest loss with a minus 11.1% return. 13 out of the 21 completed years had positive returns. The best monthly return was 7.6% in July of 2009, and the worst monthly return was a minus 11.1% loss in January 2022. About 66% of the months with a non-zero return had a positive return. The maximum drawdown for this strategy over the backtest period was minus 17.1%, which is the largest peak to trough loss. The system experiences multiple drawdowns, but most are contained under 10%. And we see significant drawdowns occurring around 2008 to 2009, which is when the Great Financial Crisis took place, and 2022 to 2023, when we had a bear market. The system tends to recover after drawdowns, but some periods, for example, post-2022, show prolonged drawdowns. To enter a trade, we follow two key conditions. The 15-day average directional index, or ADX, must be below 35. This tells us that the market is in a low volatility state. And if so, we place a stop order at the highest closing price of the past 100 days. This ensures we enter on a breakout. Next, we need to know when to exit. Here's how we manage risk and take profits. We take profit when the price reaches 3 times the 14-day average true range above the entry price, and the stop loss is set at 6 times the 14-day ATR below the entry price. For a realistic backtest, we have included transaction costs of a commission of either $1 or half a cent per share, whichever is higher, and a slippage of 1 tick for stop orders. The SPY is a very liquid ETF with close to $30 billion of average daily traded value, so the slippage should be minimal. These transaction cost assumptions help ensure our results are closer to what you'd experience in live trading. Now let's take a look at some real trade examples. You can see how the strategy enters at key breakout points and manages risk. If we recap the entry rules, anytime the ADX is below 35, we place an order with an entry stop for the next day at the highest closing price of the past 100 days. In this case, due to a strong market rally, the stop is triggered and the price fluctuates between the take profit level and the stop loss level until one is triggered. In this case, it's the take profit that's triggered almost 4 months later with a return of plus 3.7%. This example trade shows a loss, where instead of triggering the take profit, the stop loss was triggered instead with a loss of minus 8.95% in this case. The win rate for this strategy is 85%, so this only happens roughly 15% of the time. So what's next? We're moving into forward testing, tracking live market performance to see how this strategy holds up. We'll be updating the performance of this strategy on a monthly basis. If you want to follow along, make sure to subscribe. Just to reiterate, while this strategy may not seem spectacular on its own, our goal in this series of videos is to assemble a portfolio of strategies that in combination can deliver more than 2x the rate of return of the SPY with less than half of the maximum drawdown. The key is to find strategies that are not highly correlated with each other and have an exposure adjusted return of more than 10.5% and a better maximum drawdown. Then combine them to build our holy grail strategy. If you found this strategy valuable, hit the like button and let me know in the comments what you think. And if you want the full detailed strategy document, you can download it for free at the link on the screen. You can also sign up for my newsletter for more trading strategies and insights, and follow or DM me on X. My handle is @GrailWealth. See you in the next video and happy trading.